Asset 1. Treasury bonds, the government-backed safety net. Let's start with the most conservative yet reliable option, Treasury bonds. These government-backed securities are essentially loans you make to the government in exchange for interest payment. Unlike banks that can fail during economic downturns, U.S. Treasury bonds are backed by the full faith and credit of the American government. Even during the Great Depression, while banks collapsed everywhere, government bonds remained rock solid. They're considered virtually risk-free in terms of default. Right now, U.S. Treasuries are paying over 4% annually, significantly higher than the average savings account. During times of crisis or instability, these bonds tend to increase in value as investors flock to them as safe havens. Start with as little as $100 through Treasury Direct, the government's official platform for buying bonds. Alternatively, brokerages like Fidelity or Vanguard offer easy access to Treasury securities. Allocate a portion of your emergency fund to short-term treasuries for both safety and improved returns. But what if you want something more tangible that you can actually see and touch, something that appreciates over time while potentially generating income? Draws. Asset 2. Real estate, building wealth, brick by brick. Real estate remains one of history's most reliable wealth-building vehicles. Unlike cash that shrinks with inflation, properties typically appreciate over time while providing utility or rental income. Think about this. In many urban areas, property values have increased by over 40% in just the last 3 years. Meanwhile, rental income provides regular cash flow that typically adjusts with inflation. It's physical, tangible, and can't be created out of thin air like currency. Cities like Austin, Nashville, and Raleigh have seen exponential growth in property values, creating wealth for owners that far outpaces what any bank account could deliver. Even during economic downturns, people always need places to live, work, and shop. If you don't have enough for a down payment on an investment property, consider real estate investment trusts, REITs, like Prologis, Prist, or Realty Income, O, that allow you to invest in real estate through the stock market with minimal capital. Start with as little as $100 in a REIT through any brokerage account. But what about when everything around you is devaluing? When even the strongest currencies face pressure? That's when you might want to consider an asset that has maintained value for thousands of years. Sector. Asset 3. Gold and precious metals, the eternal store of value. While governments print money endlessly, gold remains unchanged, scarce, physical, and indestructible. It has served as a reliable store of value for millennia, across civilizations, and through countless currency collapses. In 2025 alone, gold prices have surpassed $3,000 an ounce, reaching historic highs driven by global uncertainties and geopolitical tensions. Unlike fiat currency, which governments can print at will, gold's supply is limited by what can be physically mined. As Charlie Munger, Warren Buffett's longtime partner, once said, "Gold is a great thing to sew into your garments if you're a Jewish family in Vienna in 1939. He understood its value as the ultimate protection against systemic collapse. Even today, central banks worldwide continue adding gold to their reserves, a telling sign about trust in the monetary system. Start small with 5 to 10% of your portfolio in physical gold coins, like American Eagles or Canadian Maple Leafs, through reputable dealers like APMEX or JM Bullion. If you prefer convenience, consider gold ETFs like GLD or IAU that eliminate storage concerns while providing exposure to gold prices. But what if you want your money to work for you, generating income while potentially appreciating? Let's talk about ownership in real businesses. Asset 4. Dividend stocks, owning pieces of real businesses. While cash sits idle in a bank, dividend stocks allow you to own pieces of profitable businesses that share their earnings with you regularly. Quality dividend stocks not only provide income, but also offer growth potential that can outpace inflation. Companies with long histories of paying and increasing dividends, like Johnson & Johnson, Procter & Gamble, or Coca-Cola, have consistently rewarded shareholders through good times and bad. Many have increased their dividends annually for decades, providing a growing income stream that banks simply cannot match. Unlike bank deposits, dividend stocks represent ownership in real assets, inventory, intellectual property, and cash flows. While their prices fluctuate, quality companies tend to increase in value over time, offering both income and growth. Consider starting with dividend ETFs like SCHD or VYM that provide instant diversification across multiple dividend-paying companies. Set up automatic dividend reinvestment to compound your returns. Aim to start with at least $500, adding small amounts monthly through a low-cost brokerage like Fidelity or Charles Schwab. Have you ever wondered what the world's wealthiest people do differently? They rarely keep significant wealth in bank accounts. Instead, they build or invest in businesses. Yar Asset 5. Your own business, the asset you control. While money sits in a bank losing value, a business gives you autonomy, cash flow, and control over growth. Your own business isn't just an asset. It's a wealth generation vehicle with virtually unlimited potential. Many millionaires didn't get rich from savings accounts. They built businesses that solved problems or fulfilled needs. From Jeff Bezos starting Amazon in his garage to Sarah Blakely launching Spanx with $5,000, entrepreneurship has created more wealth than banking ever could. The beauty of entrepreneurship today is that you can start small. A side hustle, e-commerce store, or service business can begin with minimal investment, yet grow into a significant asset that pays you repeatedly. Start by identifying problems you could solve or skills you could monetize. Platforms like Shopify make it easier than ever to start an e-commerce business with minimal investment, while marketplaces like Etsy allow you to monetize creative skills. Begin with just 1 hour daily dedicated to building your business asset. But what about when digital systems fail, when cards don't work, and online banking isn't accessible? That's when having some assets completely outside the banking system becomes crucial. Asset 6, strategic physical cash reserves, freedom in paper. Yes, physical cash, but not kept in a bank. Having a strategic cash reserve at home in a secure location provides immediate access during emergencies when banks limit withdrawals or electronic systems fail. During banking crises in Greece, 2015, Lebanon, 2019, and even in the US with Silicon Valley Bank, 2023, many people were left without access to their own money. Banks closed, ATMs emptied, and withdrawal limits were imposed. In these scenarios, having physical cash outside the banking system proved invaluable. Financial expert Suze Orman recommends keeping at least $1,000 to $2,000 in cash at home in a secure place, not for investment, but for true emergencies when digital systems fail. Create an emergency cash fund in a fireproof, waterproof home safe. Start with enough to cover 1 week of essential expenses and gradually build to 1 month's worth. Rotate bills occasionally to prevent deterioration, and keep denominations small enough to be useful for everyday purchases if needed. But what about the digital future? Is there a modern alternative to traditional banking that offers something fundamentally different? Asset 7, Bitcoin and cryptocurrencies, the new financial frontier. Finally, the most controversial asset on our list, yet one that has outperformed all traditional assets over the past decade. Beyond just a digital currency, Bitcoin represents an alternative value system with no bank, no government, and no uncontrolled printing. Unlike the dollar, which can be devalued by political decisions, Bitcoin has a capped supply of 21 million units, period. This scarcity, combined with growing adoption, has driven its value from pennies to tens of thousands of dollars per coin. Major institutions are no longer dismissing crypto as mere speculation. BlackRock, the world's largest asset manager, now offers Bitcoin ETFs to clients. El Salvador has made it legal tender, and corporations worldwide are adding it to their balance sheet. Start small, perhaps with 1 to 2% of your investment portfolio. Platforms like Coinbase or Cash App allow you to begin with as little as $1, gradually building your position over time. Focus on education first. Understand blockchain technology and cryptocurrency fundamentals before making significant investments. Whoa! The balanced approach to financial safety. The key isn't abandoning banks entirely. It's strategically diversifying your assets to reduce risk and increase potential returns. Each asset serves a different purpose. Some protect purchasing power, others generate income, and some offer growth potential. Remember, financial security isn't about having all your eggs in one basket, even if that basket is FDIC insured. It's about thoughtfully distributing your resources across different asset classes based on your goals, timeline, and risk tolerance. Consider this. If you had $100,000 10 years ago, keeping it in a savings account would have left you with effectively less purchasing power today, despite a slightly higher nominal amount. That same amount diversified across the assets we've discussed could have multiplied several times over. Take action today. Start small if necessary, but start somewhere. Review your current financial setup and identify where you might be overexposed to banking risks. Then, systematically begin building positions in alternative assets that make sense for your situation. Your financial future is too important to leave entirely in the hands of a banking system that prioritizes its interests above yours. By diversifying into these 7 assets, you're not just protecting your wealth, you're positioning yourself for greater prosperity regardless of what happens in the financial system. What will your first step be? Which of these 7 assets resonates most with your situation right now? Drop down in the comments. The choice is yours, but the time to act is now. Subscribe for more.